Gabriel, for you, why is there this disconnect happening right now between the way the market perceives it and the sentiment and really what you're seeing in the business?
Yeah. Look, so firstly, thank you for having us. So as you said, the fundamentals are stronger than ever in the three asset classes we operate, which are retail, industrial, and then purpose-built rental. I think the reason there's this disconnect at the moment is a lot of investors, particularly retail investors, read the paper every day and read pressure in office. House prices in Toronto slowing down, and they read mortgage rates are up, and therefore assume that translates to commercial real estate. And a large portion of our unit holders are retail investors, and therefore they may go and make an incorrect assumption and sell their units. But just from a fundamentals point of view, our grocery anchored retail have never been stronger. We just reported results last week. We got phenomenal rent spreads on releasing, rent spreads almost of 20%. Our industrial business, which is only 15% right now, but a meaningful avenue of growth in the future, truly has been on fire. We're getting sometimes triple the amount of rent that we had from the previous tenant. And then our purpose-built rental, although small, has great long-term fundamentals behind it, and we believe will continue to perform well.